Asian currencies edge higher as dollar dips before Jackson Hole. Most Asian currencies rose slightly on Thursday, benefiting from weak point in the dollar as buyers awaited more cues on financial coverage from Federal Reserve Chair Jerome Powell this week. The South Korean received rose the maximum amongst its Asian friends, adding 0.3% after the Bank of Korea raised interest quotes as anticipated. But the received hovered simply above lows ultimate visible in 2009, because the valuable financial institution flagged slowing economic boom and better inflation readings in 2022. The Japanese yen recovered slightly to the greenback. But weekly facts showed that foreign funding inside the USA's stocks and bonds changed into dwindling amid sluggish monetary boom and surging inflation. Bank of Japan board member Toyoaki Nakamura said on Thursday that current headwinds to the Japanese economic system from rising commodity expenditures and COVID-19 cases intended that the imperative financial institution become not going to elevate interest costs anytime quickly. The scenario is essentially negative for the yen, as a widening interest price hole between Japan and other economies saw a drastic devaluation of the forex this year. Japanese inflation hit a marathon 7-year excessive in July. The Chinese yuan rose 0.1% after the People and RS Quo.'s Bank of China set a stronger each-day fixing. But the foreign money traded around 2-year lows as developing concerns over the Chinese financial system dented sentiment. China announced more stimulus measures on Wednesday to shore up economic increase. But a debt-saddled real estate sector, stubborn COVID lockdowns, and a brewing strength crisis seem in all likelihood to weigh on a healing. The yuan has fallen sharply this year as a series of COVID-19 lockdowns ground Chinese monetary pastime to a halt. Traders at the moment are cautious of yuan exposure for the reason that Beijing has refused to cut back its strict zero-COVID coverage. Broader Asian currencies advanced, even as the dollar index retreated in advance of Powell and RS Quo.'s cope with to the Jackson Hole Symposium on Friday. Dollar index futures sank 0.2%. But at the same time as the dollar retreated on Thursday, it remained pinned round 20-year highs, as investors extensively predicted Powell to reiterate the Fed and RS Quo.'s hawkish stance. A slew of Fed officials have signaled that the valuable bank is unlikely to cut back its pace of interest rate hikes, for the reason that inflation is walking at 40-year highs. 61% of investors now anticipate the Fed to hike charges by 75 foundation points in September.